Good afternoon. Today I wanted to give you a very, very brief rundown on fringe benefits tax because it is quite complicated, and we originally prepared this around Christmas time. I'll tell you why in a minute. Fringe benefit, FBT, is what it's known as. It stands for fringe benefits tax. It's, in a nutshell, it's a tax that employers pay for benefits they provide to employees in lieu of salaries and or wages. Now, it's totally different, totally separate to income tax, and it's actually calculated on the taxable value of any fringe benefits that are provided. The FBT year runs from the 1st of April to the 31st of March each and every year. Now, the following thresholds apply for certain FBT exemptions. Now, the reason we wrote this originally, the reason we originally wrote these slides around Christmas time was because of this slide, and that is, there's a minor benefit exemption. So in other words, if you provide a fringe benefit that's deemed minor, which by definition is something that's worth less than $300, then there is no fringe benefits tax. It is exempt from fringe benefits tax. And the reason we wrote it at Christmas time is to cater for the Christmas parties and bits and pieces. So for an employee, if you provided them a benefit, e.g. the Christmas party, and the value per employee, which would have to include their partners if their partners are invited, is less than $300 in total per person. So in other words, if you invite the husband and the wife and the husband works for you, it's husband and wife combined has to be less than $300 to be a minor benefit exemption for the year. Just wanted to bring that up, that's why. Now, technically speaking, for a fringe benefit tax to be reportable, it has to be worth more than $2,000. What that means is sometimes there's values showing on the payment summaries that employees receive at the end of the financial year. The only time there's going to be a value on there is when the total taxable value of the fringe benefits provided to you, being the employee, exceeds $2,000. Where you happen to borrow money from a company, for instance, or where there's a car fringe benefits provided to an employee or a loan provided to an employee, the benchmark interest rate is currently 5.2% per annum. So what the ATO do is we basically factor in as if the money's been loaned at commercial rates, and they base the commercial rate to be for 2019 FBT year is based on 5.2% for loans interest and factoring in a 5.2% rate for car benefits. And obviously we wrote Merry Christmas. But with FBT, it was only a very brief explanation. I just wanted to give you an idea of how it works. And reality is, if you're not sure about the impact of fringe benefits tax and whether it's applicable or not applicable to you as a business or to if it affects you as an employee, please contact us and we can have a discussion with you about what you do, how you do it, what benefits, if any, are provided and whether they attract fringe benefits tax or not. And if they do, we can go about working out the calculations for you and working out what impact that has on your financials and tax return, and if there's any fringe benefits tax payable or not, and what the ramifications are both now and in the future. So we encourage you all to speak to us as you're ready to talk about potential loan fringe benefits or car fringe benefits, or if there's anything else you're not sure whether there's fringe benefits tax applicable. Please contact us and we'll have a chat with you one-on-one to talk through the scenario and what it means. But otherwise, until we speak again, thank you for your time, and I'll say goodbye for now.